I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend, someone who is your friend and freedom's friend, the great Bill Holter, also known as Mr. Gold. Bill inherited that title. His partner, who passed away, Jim Sinclair, was always known as Mr. Gold. And when Jim passed away, well, the heir apparent, being the phenomenal financial and precious metals analyst that he is, Bill Holter was given that title. BillHolter.com. If you whittle it all down, we could spend 10 minutes giving Bill's introduction, but the bottom line is Bill is one of, if not the best, financial forensic analysts in the world. And he subspecializes in precious metals. Bill Holter, Holter, BillHolter.com. Bill, welcome back to the Operation Freedom platform.
Thank you for having me again, Dave.
It's okay, Bill. Let's get at it. So, we had this election November 5th, 2024. Give us your take.
Well, it went the way I thought it would go if there was not massive cheating. Mm-hmm. So yeah, Trump has a mandate. Obviously, the public is pissed off, and I think a good part of the public being pissed off is all the DEI pronoun, all that bullshit. I think people are fed up with that. I felt good for about a week until he started making his cabinet appointments, mm-hmm. and now there's a bunch of them that I don't like. Mm-hmm. And as of a couple days ago, mm-hmm. now they're talking about passing laws, anti-Semitism laws, that if you speak bad of Israel, you go to jail. So, Trump was talking First Amendment rights. That's, the most important amendment to the U.S. And what's the first thing they're starting to do? They're going to shut your free speech off, and not shut it off, but there's ramifications if you say something bad. Mm-hmm. Originally, I was really happy that Trump won, simply because mathematically, the financial system is going to come down. Mm-hmm. There is no one on the planet, there's no human alive that can reverse the math that's already in place. I mean, the debt is overwhelming the system. We're going to be close within a couple, 3 years. If we get there, we'll be over $2 trillion a year in interest expense only, and we only take in 4.7 trillion. Mm-hmm. So, that's going to squeeze out all kinds of stuff. They're going to have to start dropping all kinds of programs because they can't pay for it. But I was pleased that Trump got in because, like I said, mathematically, this is going to come down. And when it comes down, the question is, do we go down under the rule of law mm-hmm. of the U.S. Constitution, mm-hmm. or do we go down under their rule of law that changes depending upon the situation? So, I had a week of feeling good, and now I'm just he's packed a bunch of war hawks. And I think that's not a good thing.
And I'd like to disagree with you, but I'm very concerned as well, Bill. America first is America first, right? And
right.
Unfortunately,
not Israel first,
right? And not war first,
right?
Right? We got to give people their. Let's see what happens. But I share your concern. And at the time that we're recording this, Bill, the Treasury Secretary nominee has not been named. Mm-hmm. So there are two names, and I'd like your take of, if Bill Holter was in Trump's ear right now, who would he tell Donald Trump to put, knowing full well the numbers are the numbers, right? That we're almost coming up on $36 trillion in debt. Our last year deficit ending at the end of October was 1.8 trillion, of which our carrying costs for interest charges are 1.1 trillion. right? I mean, my gosh.
Plus $1 trillion trade deficit. Don't forget about that.
That's right. So the numbers are the number. So the two names I'm hearing is number one is John Paulson, the hedge fund Wall Street guy. And the other name I'm hearing is a guy by the name of Scott Bessent. Now, who's Scott Bessent? Well, Scott Bessent is a hedge fund manager, and he's the former chief investment officer of a very benevolent organization, the Soros Fund Management Group.
Okay.
All right. So, Bill, those two names are not inspiring to Dave Janda. What about Bill Holter?
Well, they're both hedge fund guys, obviously, and I didn't know that the second guy ran a Soros hedge fund, but obviously anything that is involved with the name Soros is dark.
Yeah.
I would say, you asked me what my pick would be, and I would say for both Federal Reserve Chairman and Secretary of the Treasury, if you could clone her, would be Judy Shelton.
Yeah, that's right. Judy. In fact, I mean,
she can't fix it.
No.
Nobody can fix it.
No.
But at least you would know you have someone that uses logic in their thought process.
And for those of you not familiar with Judy Shelton was actually at the end of the Trump first administration was nominated for Federal Reserve to be on the Federal Reserve Board. That caused almost as much hubbub as Matt Gaetz currently being the nominee for, because she is hard asset based, gold and silver, right? That the dollar, the bonds of the United States need to be backed. They can't be vapor. And they despised her so much, Bill. They never brought her. Trump nominated her. For months, they never brought her name up for a vote.
Well, because they were in the minority. That's why.
Yeah.
That's the reason behind it. But understand that Judy Shelton, going back to, I think, maybe 2005 or maybe a little bit earlier, has been an absolute proponent of having a ratio-backed dollar with gold. Gold being the anchor. And this was back in 2005, and she's still, last I've heard, she's still using the same number, that you've got to mark gold up to $10,000 an ounce. Well, first off, today compared to 2005, it would have to be a much, much, much bigger number. The other thing is, do we even have the gold to mark up?
Right. So I saw a recent interview with her. And she was talking about that, backing the dollar with precious metals, gold and possibly silver, and then also was talking about backing these zero coupon securities with gold. But the assumption she put forward is, well, there is gold in our system to back it. Well, Bill, I'm not convinced of that. I mean, call me a conspiracy theorist. You're the pro on this, but Bill, we're supposed to have what, 8,300 tons?
Right.
Bill, if you and I get in our car and we go to Fort Knox and we go to West Point, we go wherever else they're stashing this in J.P. Morgan's vault or whatever in New York or whatever, New York Federal Reserve Vault. But Bill, I believe we don't have 8,300 tons there. I don't think we're close. Am I off?
Yeah, there's no way to prove it, but there's not been an audit. There's been no audit since 1956.
Right.
And I would just say, this is not like forensic digging. There's no way to know one way or the other.
Right.
But just from a common sense standpoint, if you know that they lie to you about everything else,
right,
why would they tell you the truth about gold, which from a financial standpoint is the most important data point of any? Because before we went off the gold standard, severed the ties with gold, gold for hundreds of years was the anchor. It was the foundation to the entire financial system.
Mm-hmm.
So for them to, all I'm saying is they have an incentive to lie to you.
Mm-hmm. Mm-hmm.
And if they lie to you about things that don't matter, why would they tell you the truth about something that's so important?
Right. Well, remember,
that's just common sense.
Remember the first Trump administration, his Treasury Secretary was Goldman Sachs alumnus, right? Mnuchin, right?
Yeah.
So he sends Mnuchin to Fort Knox. Mnuchin had been involved in the movie industry. You remember this, Bill, but our listeners might not. He sends him to, and before he walks in the doors at Fort Knox, he goes to the press, "Wouldn't this be an interesting movie if I actually went in there and there wasn't any gold?" Right? Okay. He goes in there. He comes out maybe an hour later, not much more than an hour. Comes out and he says, the gold is good. No, what? Gold is good.
No, he didn't. Gold is good.
Gold is good.
The word the.
Right. Gold is good. Right. Gold is
right.
Yeah. Gold is good. What's going on? What's going on in there?
Right.
Right.
Yeah. He didn't even use the word the. So he told the truth. Gold is good.
Yeah.
But
so are French fries.
The gold that's supposed to be in Fort Knox, was it there or not?
Right.
And I mean, they don't let senators in. They don't let representatives in.
No.
Nobody gets to see it.
No.
But you have to trust them that it's all there. And I don't.
And the Fed has been pushed on this, and Powell has come out very strongly. No, there's not going to be an audit of the gold reserve. No, nobody's going to go see it. I mean, Bill, that's all you need to know, right?
Exactly.
Okay, so let's say Trump appoints Judy Shelton. And Judy Shelton comes in and goes, yeah, we're going to back bonds, these zero coupon bonds with gold, and we're going to back the dollar with gold. And everybody goes, yay. And then they go, well, we got to see the loot in order to say we can back it. So let's say this time Judy Shelton goes to Fort Knox, goes to West Point, goes to the New York Fed, goes wherever this stuff is pushed around, and comes up with a bunch of dust balls.
Okay.
All right. Bill, tell us what happens in that scenario.
Well, then Judy Shelton would have to lie and say the gold is there, because if she didn't lie, the system would implode. Markets would not open the next day. And just so you understand, at current prices, assuming that all the gold is there, I think the number is something like 700 or 800 billion.
Mm-hmm.
That's the amount of gold that we say we have. How is 7 or 800 billion dollars
right.
going to back not only 36 trillion,
right.
but what about the promises, the loan guarantees, Social Security, Ginnie Mae, Fannie Mae, Freddie Mac, Medicare, et cetera, et cetera.
Mm-hmm.
That's $200 billion or
$200
trillion.
Yeah.
So can less than $1 trillion support the 36 trillion? Can it support 200 trillion? No. But if you mark gold up, I don't know, 50-fold, now you're talking.
Mm-hmm.
And let me also mention that I don't think the Chinese, I don't think the Russians, I don't think any of the BRICS nations would have a problem with a big markup in gold.
No.
Because they actually have the real metal. And
they're telling us they actually have less as opposed to what we're doing, right? They're the flip side. They really have more than they say they have. They're playing rope-a-dope, right? Meanwhile, we're playing, hey, look how massive I am. Yet it's all inflated, right? With essentially financial steroids or whatever you want to call it.
Well, just on the back of a napkin, you can pretty much show China's got at least 25,000 metric tons. I saw a pretty credible article a week or 2 weeks ago. I posted it on my website. that China has 35,000 or more metric tons of gold.
Mm.
I mean, they're mining 400 tons per year, and none of that leaves the country. And they've been doing that for years and years. So, I mean, even since the beginning of the century, they've built up, I don't know, 8,000 metric tons just on internal production that doesn't leave the country.
So, Bill, then the question is, well, what's holding China back from telling the world the loot they actually do have with physical metals? And you just mentioned gold, but they have a loot, if you will, of silver as well on hand.
Right.
So what's holding them back from coming clean?
I think the answer is World War III.
Yeah.
Because if they came out and said, pick a number, 25,000, 35,000, whatever metric tons of gold.
Yeah.
They've got a bunch of silver. That would basically implode LBMA, LME, implode the COMEX, because what you'd have is that would be blood in the water, and people would just go crazy buying gold. You'd have Chinese citizens. You'd have the world trying to buy gold. And it can't be done because it doesn't exist to be bought, so it can't be delivered. And I think China's thought process, Russia's thought process, and thus the way the BRICS think is they're not going to do anything overtly to push the United States over the edge and cause financial panics and thus the system coming down. They're going to let us do it on our own, and we're doing a great job of it. They'll let us do it, and they'll say, hey, we didn't do this. You did this yourself. And that way, nuclear weapons flying through the air hopefully could be avoided.
And and so they've been doing this incrementally, right? So they're rolling out the BRICS system, right? Okay, the way they're marketing it, smart, is, well, wait a minute, you cut us out of the system in March of 2022. Hey, you know what? You forced us to do this. Well, now you got Putin right at the most recent BRICS meeting where you had 140-some countries lined up saying, yeah, we want in on that system. You had Putin saying, we're going to establish our own markets, our own physical-based commodity markets in, I don't know, gold, silver, oil, natural gas, food, agricultural products, right? I mean, Bill, people have told me I'm reading too much into what came out of that meeting. Bill, you're the expert. I think this is the incrementalism of where they're saying, guess what? We're the new sheriffs in town, and we got all the loot in and you got all the dust in your safes. We got all the loot in ours. We're marching through this. We're just doing it in an incremental fashion. Unless you get even more out of line, then we'll really drop the communiques to blow this thing up. Am I off on that?
No, I think you're right. And I think the real tell is the one country that didn't show up to the BRIC meeting.
Saudi Arabia.
Exactly. They did not show up at all. They didn't even send an envoy. And the reason behind that is they own something like 800 billion worth of treasuries, and they watched what happened to the Russian treasuries, the 300 billion. Those were stolen, confiscated. It's been told as collateral for loans for Ukraine. But Saudi Arabia did not show up because they don't want their 800 billion taken or sequestered or stolen. So I think that's the biggest tell right there, is that, supposedly a U.S. ally that's applying for or has already joined the BRICS doesn't show up. That could be the only reason they didn't show up, is that they don't want to be fleeced for almost $1 trillion.
Meanwhile, they're keeping their affiliation with BRICS.
Right.
Yeah. So they're kind of playing both ends against the middle.
Because
they know
They know the future.
Yeah. Right. So Bill, at the most recent Fed event, they have these powwows, and Powell rolls out there, and this is a planted question. You could tell it, right? So this reporter goes, "Oh no, now that President Trump has been elected, Chairman Powell, if he says to you, I want you out, what are you going to do about it? And he said, I'm not leaving.
Right.
And many people said, wow, he's really flexing. No, actually, here's tell me if my read on this is wrong, Bill. What Powell was saying is, look, the Federal Reserve is exactly what Bill Holter has been telling you for decades. The Federal Reserve is independent of the executive, legislative, and judicial branches. It's not a part of the federal government. We're an independent group of bankers who are going to do what's best for bankers, not the citizens, and we run our own show. Now, Bill, is my read on that wrong?
No, they're privately owned.
Right.
I mean, it is not federal. It has nothing to do with the federal government. Nope. They have no reserve.
Nope.
They have a negative net worth at this point. And while we're talking about the Federal Reserve, they cut rates 0.5 point and 1/4 point, so that's 75 basis points. But bond yields are 0.5 point higher now from the day they began to cut rates. Mm-hmm. So, you know, their portfolio has sunk further. Mortgage rates have gone up by 0.5 to 3/4 point. Mm-hmm. Rates across the board, other than the ultimate, you know, two years or less, those have not gone higher. Or the point being, the market generated rates have gone higher. So they got exactly the opposite of what they were trying to do.
And that's indicative, Bill, where the markets are saying, essentially giving the middle finger to the Fed, saying you can do whatever you want, but the numbers are the numbers, the debt is the debt, the deficit is the deficit, and this system is imploding, and you can blow smoke up the chimney all you want and up people's skirts, but it doesn't matter. Is that a wrong read?
Right. No, that's exactly right. And they back in the 60s, 70s, 80s, all the way through probably the year 2000, they were called bond vigilantes.
Right.
And actually, if you go back to the 60s, 70s, 80s, to the late 90s, early 2000s, I forget when it was, the Fed never came out and said, we're lowering interest rates or we're raising interest rates. They did what they did, and you needed to be a forensic economist to look at the various money market instruments to see whether the Fed was tightening or loosening. Mm-hmm. So they never announced anything. And you had a lot of smart people managing the pension monies, and those monies, if the Fed was doing something that was inflationary, harken back to the 1970s, mm-hmm. culminated in 1980, 1982, mm-hmm. with, you know, interest rates in the teens. The bond vigilantes, they would sell bonds, mm-hmm. push the price down, and the yields would go up if the Fed was doing something that longer term was bad. So you had the marketplace keeping the Fed in check. You don't have that anymore because the amount of debt that's coming out is so huge. It's like the market participants don't have the control that they once had.
So, Bill, since the election, we have seen a fairly significant drop in gold and silver. And the question is, you're the expert, why is that? Because the numbers are the numbers. The debt hasn't changed. The deficit hasn't changed. Obviously we've been facing a collusive manipulation operation for decades. Why the significant price drop in gold and silver?
Well, first off, you have to understand that gold and silver had been on a tear mm-hmm. since April, May.
Very much so.
Without really, silver had somewhat of a correction, but gold was a bulldozer in first gear and just kept grinding higher and higher and higher and higher. So both of them, from a technical standpoint, were definitely due corrections. Mm-hmm. I can tell you, and I have not looked at the number in gold, but I can tell you in silver, I think it was Wednesday last week, the day after the election. Mm-hmm. There was actually over $700 billion worth of paper contracts in the silver market, and total global production for 1 year is only like it's 800 million ounces, and the totals were almost equal. I said $700 billion. That's incorrect. It was
ounces.
It was 700 million ounces were traded that day. How's that even possible?
It's impossible.
I mean, it's impossible.
It's impossible
in a real market
without fraud.
Yeah.
You have to have fraud.
Right.
You have to have fraud.
So now add to that the knee-jerk reaction was, the dollar was trading at 102 or thereabouts, had bounced off the 100, so it had recovered a little bit. Then we had the election, and the dollar went ballistic.
Mm-hmm.
You can make a case for the dollar being slightly stronger just because, Kamala doesn't even know how to add 2 + 2 in the business world.
Right.
So that would have been a disaster. So there was a bid under the dollar and caused a short squeeze, and I would say you probably had Federal Reserve, however they do it, because you can't really buy dollars with dollars. But I think there was official buying in the dollar to push that higher. And when you have the dollar going higher versus other foreign currencies, you're going to get natural weakness in gold and silver. Now, you're not going to get 7%, 8% weakness in gold, and you're not going to get, 12, 13, 14% weakness in silver. Those were exacerbated by paper shorts caused by paper longs in the dollar. But, that explains just the general direction of the dollar had shifted. Gold and silver were certainly ready for corrections. And now you've got, silver is oversold at this point. Mm-hmm. So it only took a week to go from not quite overbought to oversold.
Mm-hmm. And at the same time, Bill, my email box, I'm sure your email box, has been chock full with people saying, oh, look at Bitcoin. It's 80, 85, 90,000, soon to be 100,000, soon to be 300,000 per Bitcoin.
13 million by Michael Saylor.
What's that?
Michael Saylor says 13 million.
Okay, there you go.
Michael Saylor, he's a columnist, says that Bitcoin's going to 13 million.
So
pick a number.
Yeah, right. Pick a number. So Bill, do you want to address that?
Well, first off, I would ask, what is a Bitcoin?
Good question.
You can't hold it. There is now serious evidence that Bitcoin was created by the NSA.
Mm-hmm.
So
with some help of the CIA, with some help of the CIA folks too. Yeah. Mm-hmm.
In my mind, that's a problem.
Yes.
And I will say absolutely that Bitcoin is a wonderful speculation tool. Mm-hmm. But what are you speculating on? Mm-hmm. You're merely speculating on whether the price is going to go up or go down, not whether it was, a bad harvest year or whatever, like a general commodity. And I will also say that Bitcoin, the reason to buy Bitcoin has morphed a dozen times over the last 10 years. If you remember 8-10 years ago, we were told, Bitcoin is totally private. No one will ever know what you do. It's the way for you to hide from the government. And how many cases have Bitcoin wallets been cracked open and everything taken out by the FBI? Then we were told that, Bitcoin's going to become a currency. You're not going to use dollars anymore. You're going to go to Walmart and you're going to use Bitcoin. It's just been reason after reason after reason, and they've all changed to buy Bitcoin. Mm-hmm. And if past reasons to buy Bitcoin turn out to be bullshit, why is the current reason to buy Bitcoin real? Mm-hmm. And in my opinion, and I'm going to equate Bitcoin to GLD and SLV, which were the two ETFs brought out in 2003, 4, 5 for gold and silver, which by prospectus, they do not have to buy physical metal. They could be 100% contracts, no physical metal whatsoever. But when they came out, I said they are going to be pressure relief valves for the demand going into gold and silver, and thus reduce the upward price pressure on physical metal. And I think the same thing on Bitcoin, because, buy Bitcoin, that's you getting out of the system and getting out of the dollar. So I think Bitcoin's original true purpose was to be a pressure relief valve on the gold and silver pricing.
Bill, at the beginning of this interview, I spoke about your relationship with Jim St. Clair. And both Jim and you, for many years, have said, if you want to protect yourself, get out of the system. In other words, get out of paper assets, right? So there, and Bill, there are many people that said, that makes sense. That makes sense, because a lot of this stuff is, vapor, this paper stuff. So, but I want to get into paper assets, and they contacted their financial advisor, and their financial advisor said, okay, but just get some of this GLD and SLV. You'll have your precious metals, your physical metal, but this way, it's too hard to own physical precious metals. And the same, so people got sucked into that, right? That's the pressure valve. And the same people that said, hey, I want out of the system, so they started buying into Bitcoin, right? And let's face it, it's like going to Vegas, right? The higher the price goes, the more money on that slot machine you could win. It attracts more people to it, right? Until they suck everybody's money into it. And tell me if I'm off on this, my concern, Bill, and we saw this years ago with MF Global, a keystroke.
Pull the plug.
And it's gone. So let's say the financial system is really craters. It really comes down in its own footprints, right? And we have some, and the internet is choppy at best, right? Well, Bill, and tell me if I'm wrong on this. I would much rather have something in my hand,
right?
Some silver coins, than a really huge Bitcoin stash that's behind the internet wall that I can't get to. That all of a sudden now, my wallet is saying, I don't have what I was supposed to have. Am I looking at this wrong?
Well, I'm going to come at this from a different angle. You're coming at it from the Bitcoin angle.
Yeah.
And I do agree with that. But I'm going to come at this from the angle of, we were talking about getting out of the system.
Right.
We did that for years.
Right.
We recommended that people buy gold, buy silver,
right.
Don't keep large cash balances. We recommended, and I can't tell you how much time I've spent with people asking the question when we suggest get your stock certificates. I mean, that's very 1950s, 1960s, early 1970s-ish. Getting your certificate. The reason you want your certificate, the reason you don't want to hold big cash balances in your bank, and the same thing can be said for the insurance companies with annuities. When the system goes, this is not about, stocks are going to go down 50, 60, 70%. It'll be bad times for a while, and then it's going to be okay. No, everything's going to disappear. You have a 2+ quadrillion derivatives time bomb that's going to blow. And that amount of derivatives is more than all the assets. It's many times more than all the assets combined on the planet. When this thing goes, your broker is going to fail. Your bank is going to fail. And the 125 billion that FDIC has is, that's not even a piece of crust on a ham sandwich. insurance companies are going to go down. And the laws have been written, and I'm going to talk about the great taking again. The laws are in place, and they've started writing them in 2014, and they are now all around the globe in place that when your broker goes down or your bank goes down, your money is on their balance sheet. You're not a depositor at your bank. You are a lender to the bank, and yeah, you're a creditor. You are the most junior of all creditors. So you're going to get paid last. There's not going to be enough money to pay the top two creditors, much less the lowest creditor. So you're going to lose all your money. Same thing with the brokerage industry. Your stocks are not, they say it's in street name.
Yeah.
Well, yeah, it's in street name. It's for your benefit, but we own it.
Yeah.
And if the broker goes down, those stocks are going to go towards the broker's senior creditors. So that's why you want to get out of the system. You want to get into a shell, a protective shell, to protect as many assets as you can, because when this hurricane comes through, there's not going to be anything left standing. And if you're left standing with stock certificates, with gold, with silver, you're literally going to be a bank yourself, because so few people are doing this. So few people own gold and silver. And I mean, you could go to your local brokerage office and ask how many clients have asked for their certificates in a huge office in a big city, and they'll probably say 5.
Right.
Because no one's done it. No one's doing it.
No.
But it's an absolute must. You've got to get out of the system, or you're going to be taken down with the system.
So, Bill, where are we? Let's conclude our interview with this. Where are we on the supply and demand side as it relates to physical gold and physical silver? We have a public demand, right? We have a public demand.
Right.
We have a industrial demand, and then we have I don't know what you want to call it, a monetary system demand, right?
Yeah, yeah.
So where are we with the demand, and where are we with the supply on gold and silver?
I'm going to say in North America, the retail supply is pretty good. And you've seen premiums come down. Retail buying really slowed from May to August, and that's when you saw the premiums come down. If you look at the demand in Europe, the retail demand in Europe, you look at the retail demand in Asia, that's been strong. If you look at the industrial demand, now I'm going to talk about silver here. The industrial demand for silver is off the charts, and they're lying about what the demand is, because what is it? The Silver Institute was using a number of 100 and something. Well, I forget what the number was. It was 135 million ounces or something like that, and the true number is like 435 million ounces. Global production is only 850 million ounces. So we've been in a deficit for 4 years now. Now the deficit's getting bigger. I mean, the solar demand is huge, but it's not being accounted for. Now, where the supply is coming from, who knows? I don't know of any giant hoards other than possibly China. China, if you want to call it secretly or clandestinely, owns far more gold than they say they have, and I suspect they own far more silver than is being talked about. But from an industrial standpoint, they're wiping silver out. Now, the last one, if you want to call it geopolitical demand, central bank, sovereign treasuries, that's been, over the last 12 months, that's been higher than ever. There's never been a period of time where you've had central banks, sovereign treasuries, sovereign wealth funds buying like they're buying now. And to put a cherry on top of it all, it was about 4 weeks ago, Russia came out And lo and behold, yes, we're going to continue buying gold. And by the way, we're going to add other commodities. For instance, silver. And
Right.
that was the first one they talked about.
Right.
So if Russia starts buying silver and starts throwing little darts of 50 million, $100 million at a pop, they're going to crack this thing. I think what is behind Putin's thought process on this is they're just going to tighten the screws. They're not going to do something that puts it over the edge because, again, they don't want to start a war. They don't want to push us over the edge. But they can tighten the screws a little bit and speed it up.
And Bill, educate our listeners in how they can get in touch with you because you do work as well with Miles Franklin, a
Right.
broker dealer. So educate folks on the content on your site is fantastic. So educate folks and how they can follow you 24/7 and how they can get in touch with you.
You can go to my website. It's billholter.com. It's still fairly new. I put daily content up. I pick articles and put comments. We've got a couple guys that actually write articles for us, or we're blessed to be able to post their articles. I do put all of my interviews both on the main page and on an interview page, and we post other people's interviews. If I think they're good interviews, I want people to see them, so those are posted. And there is a very, very good there's a good corner on my website. It's called Grizzlys Corner. And if you want information on prepping, there's probably a dozen articles. The guy who writes it, I mean, he used to go into the absolute darkness of Idaho for 6 months at a time with a pack of mules and come out, better than he was when he started. So from a survival standpoint, a prepping standpoint, that's it's a great asset. So click on Grizzlys Corner. You'll get some really good information. If you want to talk to me or contact me directly regarding gold or silver, you can go to my website. It's BHOLTER at proton.me. And Dave, I just thought of one other thing we did not talk about because we were talking about the deficit and the interest expense. I want to mention last year you said it was 1.8 trillion. That's what rounded off to 2 trillion was what the deficit was. That's what was added to debt. That number, because the government borrows it, they spend it. And when they spend it, it goes into GDP. Now, do yourself a favor and just, this is simple math.
Right.
Take that 1.8 trillion out of GDP, and then you tell me whether we grew from the previous year or we didn't grow. And you can do that all the way back to 2008. And looking back, it pretty much proves, I was writing in 2013, 14, 15, that all they were talking about was recovery. They never, ever talked about
growth.
Exactly. We have not had growth. We have been stagnant at best, probably declined when you take out A, the deficit spending, and B, the growth in M2 money supply.
It's all a bunch of smoke and mirrors, Bill.
Exactly. That's my point.
And while they're pumping out all this smoke and mirrors, they're telling the public, gold and silver, barbarous relics, don't do that. Just keep investing in those paper vapor assets. Meanwhile, Bill, what are they doing? They're buying physical gold and physical silver, Bill.
Right. They're bankrupting the system.
Yep.
And the only things that cannot bankrupt are gold and silver.
And Bill, this is not an accident. This is not a set of bad coincidences. This is not from incompetence. This is all planned.
Yeah, read The Creature from Jekyll Island.
That's right.
You'll understand what the plan is. That's the plan.
I'd like to thank you, Bill, for your perseverance, dedication, sacrifice, and courage underline courage, for putting people's lives ahead of, frankly, your own. Because this upsets the syndicate, this kind of conversation. And I thank you, Bill, for your steadfast support of every person in our country, every person in our continent, every person of the world. BillHolter.com. Thank you, folks, for joining us. Until next time, Dave Janda signing off. Dream big and dare to fail. Thanks for your time today.